In San Francisco, and this is Bloomberg Technology. Coming up in the next hour, IBM closes its $34 billion deal with Red Hat. Our conversation with the CEOs of both companies on the second largest tech deal ever. Plus, IBM isn't the only one making deal headlines. Cisco agreed to buy Acacia Communications for $2.6 billion. How does it fit into Cisco's corporate makeover? And Facebook unveils new diversity goals aiming to double the number of female employees globally over the next 5 years. Why diversity seems to be the one big problem big tech can't solve. But first, to our top story. IBM has closed its $34 billion purchase of Red Hat, finalizing the world's second largest tech deal ever. IBM was once synonymous with mainframe computing, but has been struggling to adapt in a cloud-first world. The company is playing catch-up to market leaders Amazon and Microsoft in offering software and services over the internet. Bloomberg's David Weston spoke to the CEOs of both IBM and Red Hat earlier.
Hybrid cloud's important because it's important to our clients. It is the destination for the cloud. You know, David, I think a lot of times people think of, well, everything's going to move to one public cloud. That is not what we see clients need, want, and are even targeted to. It is this idea that I've got an existing estate, like a house, I'm going to modernize it, and I have 5 to 15 public clouds already, private clouds, on-prem, and as I modernize an app, I'm going to put it where I want, and then I have to manage and secure all that. That is the destination, and for the next generation. We give them now a platform between Red Hat and IBM that runs on any public cloud, that runs private, that runs traditional, and they can write an app once, run it anywhere, secure it, and manage it. That is a distinct and unique capability, and that's what I mean by the hybrid cloud, and that does make us the leader in that. Others talk it, but they may have just a connection between their public cloud and their private cloud. This now allows us to be multi-cloud everywhere.
Well, as Ginny says, Jim, you got some other competitors out there in the cloud, not hybrid cloud, but the cloud, that are pretty darn big, people like Amazon and Google. How is this going to help you catch up to them, or is that even the goal?
I'll start for the Red Hat component. Look, our goal is to be an even better partner with those clouds.
That's right.
They are great partners. Our software runs on those clouds. It runs on premise. It runs on IBM's cloud. It runs on those clouds. So they will continue to be great partners for us. And as we are capable of moving many more workloads onto our software platform, that's more workloads that those clouds can actually go and address and run. So my conversations with the major clouds have been very, very positive because they see this as an opportunity to get more workloads out of data centers running on their clouds.
So think of that. That's a really important reason to do this for us. Our clients want us to be able to take our platform and run it anywhere. So these are both partners, and we cooperate or in competition on the other side.
Ginny, you've ramped up the IBM percentage of your revenue from the cloud dramatically, from something 4% to 25% in a reasonably short period of time. What's the ultimate goal? Where will this get you to?
Well, look, not that there's an ultimate goal. As you think about the clients moving their work, 80% of their work is going to move to the hybrid cloud. So this will continue on. And again, when we look at our revenues, it transcends everything from our public cloud, our private cloud, now these platforms that'll be on other clouds included, and our services revenue. So it isn't that it's a goal, it's to move with the same journey that our clients need it to move with.
And what about moving, Ginny, what about moving with the overall size of the cloud expanding? How much of this will just be riding with the cloud up, and how much will be actually taking market share from other cloud providers?
Yeah, so look, for IBM itself, one way to think about this is 200 basis points of revenue growth, CAGR, over a 5-year period. And so this is what Jim just said a minute ago. The important part to think of it is our own cloud, the IBM public cloud and our private cloud together, should be the very best for mission critical work. Clients, though, as I said, have 5 to 15 clouds already. So we also want to have our platform running everywhere else. So as far as I'm concerned, growth anywhere is going to be good for IBM then.
Yeah, and to emphasize that, this is all about helping our clients provide more value to their customers, right? So when a client builds a new application, a new website, a new mobile application, the opportunities for us to participate, whether whether it is helping them build the application, helping them integrate that with data, having it run on our platform, having it run on IBM's cloud. Any of those components are, areas of incremental value that we can, participate in as our customers create more value, for their customers.
Ginny, the CEO of IBM there, along with Jim Whitehurst, the CEO of Red Hat. Joining us now to discuss further, Bloomberg Tech's Olivia Carville in New York. So, Olivia, this is a huge deal, one of the biggest tech deals in history. Will this really give IBM a competitive advantage?
I think that's the big question here, is what does the Red Hat acquisition actually do for IBM? And if you think about IBM's history, we have a 108-year-old American icon that has largely been known for its mainframe cycles. And in the last couple of years, they've been trying to reinvent themselves. This acquisition of Red Hat is essentially IBM trying to re-enter the cloud space as a totally different company. It's trying to transform what it's been providing so far and change the game. We've heard IBM CEO Ginny Rometty earlier call this a game changer for IBM. And it's important to think about why this is going to be so significant for not only IBM but for the wider cloud space, and also for other cloud providers like Amazon, Microsoft and Google, who will now be seen as partners to IBM rather than rivals.
Interesting. What are some of the risks to this new strategy, and what could go wrong?
I think that one of the biggest risks here is whether or not Red Hat will really be able to fold into IBM. This company is known to have a staunch and old school corporate work culture. So will this open source Linux providing company called Red Hat, which has been known to be a bit of a renegade and revolutionary in this space, really be able to come into the IBM family? We've heard Ginny Rometty and Jim Whitehurst, the CEO of Red Hat, talking about how within this acquisition, Red Hat will remain independent. It will remain a distinct unit within IBM. So it will have its own consulting services, its own sales, its own terms and conditions. The Red Hat leadership team, including Jim Whitehurst, the CEO, will remain within Red Hat, and they'll be able to talk to their own clients rather than through IBM. So they're hoping that in order to maintain Red Hat's independence, that this integration will really work seamlessly.
We've heard Ginny Rometty use these words, hybrid cloud, before, and in fact talking about it for the last several years as they've tried to navigate this transition. How is what IBM is trying to do different than what Amazon Web Services, Microsoft, and Google do with their clouds?
Right, so Amazon, Microsoft, Google, they all provide different public cloud networks that have particular kinds of strengths. Like Amazon's strength, for example, is its infrastructure services, or Salesforce's cloud strength is its customer relations management platform. And you see companies that are kind of buying into these services and using these clouds for different types of reasons. And what IBM is attempting to do is to become the glue that will stick together or connect all of those different clouds onto one platform. So you may be a company that needs to use Salesforce for a particular reason and needs to use Amazon for another reason. And that means that you may end up with up to 15 different cloud providers who all operate independently in different silos. And you have no way to actually bring them all together. IBM is hoping that it will be able to become that connective tissue that in essence aligns all of these different clouds under one platform. And one of the really interesting things here is that this idea, this kind of strategic move to become partners with some of these former competitors like Amazon, Microsoft or Google is what IBM actually did back in the 1990s regarding its global business services platform. It kind of partnered up with software providers and said to them, we'll allow you to run your application smoothly on our hardware. We'll partner with you rather than compete against you. And that's what saved the company. So they're really trying to do the same thing again.
A potentially huge technological transition underway if they can execute. That's Bloomberg's Olivia Carville. Olivia, thanks so much for that context there. Coming up, Facebook seeks to soothe concerns on Capitol Hill from any potential backlash to its Libra cryptocurrency project. What to expect from next week's congressional crypto hearing. This is Bloomberg. Facebook is seeking to mitigate concerns around its cryptocurrency project Libra amid growing backlash from regulators. In a letter to senators Monday, Facebook's co-creator of Libra, David Marcus, wrote, "We understand that big ideas take time, that policymakers and others are raising questions, and that we can't do this alone. We want and need governments, central banks, regulators, nonprofits, and other stakeholders at the table, and value all the feedback we have received." This after several Democrats on the House Financial Services Committee formally asked Facebook last week to immediately halt the project, citing serious privacy, national security, and monetary policy concerns. Marcus will testify before both the Senate and House committees next week in hearings on the cryptocurrency. Joining us to discuss, crypto investor and Earn.com co-founder Lily Liu. Earn.com sold to Coinbase, and Bitwise Asset Management CEO Hunter Horsley. So obviously you're both in the crypto industry. Yeah. But I'm curious what you're expecting from these hearings. Hunter, you also worked at Facebook for a long time. Yeah. What are you expecting to hear from David Marcus next week?
I think that the approach that they've taken throughout bringing Libra to market has been one of being collaborative and being open. So I expect that what you'll hear from them, which we've been hearing for a while now, is that they want to work with regulators, that they want to make sure that they protect consumers, that they want to make sure that they're developing this out in the public. As we think about Libra as we know it today, they've actually chosen to share a lot of the details of the project before even launching it. Right. So what we heard in the middle of June was the unveiling of a white paper of their partnership, well in advance of when they plan to actually introduce the protocol. So I expect that it'll have a very collaborative tone, and that it'll express a desire to work with central bankers, to work with policymakers.
Lily, what's your take on Libra? Are you optimistic about it if it actually launches in a year as Facebook plans to?
So their announcement recently is a little bit more of a pregnancy announcement more than a birth announcement. I think that it's incredibly admirable what they're attempting to do. But also they're competing pretty directly with financial institutions and also just frankly countries that issue money, right? And so I think on one hand that's really interesting that they're sort of basically coming out and sort of saying that we've got 2 billion people who spend at least an hour online with us every day. And that's really meaningful. We have actually potentially greater mind share and wallet share than many sort of countries and companies out there do. And potentially we could even better serve these people by providing eventually better financial services, better products. And it is true they have a lot more data than FICO credit scores do. Yeah. So on one hand, that's really interesting, but it goes back to the same sort of debate that we see back and forth about Facebook, which is there too much power in having that extent of data, right?
So Hunter, can we trust Facebook to not take advantage of the power that it would have in this situation, which is the concern of lawmakers?
So I think that Facebook has tried the team at Facebook working on this, David Marcus, Kevin Wheel, Morgan Beller, many others, have tried to address this head on. And two things that they've spoken to on this front. First, they put together this consortium. So they've said, we're going to have 100 different firms involved. We're going to be one of those firms. And this is clearly an attempt, they've architected this piece of it in advance, to build trust that they won't be the only people behind the wheel. Secondly, people have asked, are you going to be mining data? Are you going to be looking at what people are doing on this blockchain, on Libra? And there again, what they've communicated is it's an open blockchain. And so anyone will be able to interact with the ledger, but they have no special rights to doing that, to be doing that. So I think what you would expect to see from Facebook is that they'll continue to operate as an advertising company, but there's nothing about Libra specifically that has an insidious intent.
Would you agree, Lily? I mean, can we trust Facebook given that they've betrayed the public's trust many times?
Well, I think they've architected Libra such that exactly it's not only their project, right? They are initially they're helping sort of get this off the ground, but potentially there are 100 other institutions that you can choose to trust who are going to be helping sort of bring transparency and a diversity of different services to this network, right? And so I think that is really what they're just trying to kind of kick off, because there aren't many folks who'd be able to put together a consortium, a global consortium of folks like that. So it remains to be seen. I think that there's obviously a lot of pressure initially from countries, which is kind of who when you issue your own currency, that's kind of who you're competing with.
Well, and exactly, India's Economic Affairs Secretary actually was speaking to Bloomberg earlier and said India would not be comfortable with a private cryptocurrency, and then Facebook said it has no plans to offer Libra in India, which doesn't that undermine part of the point to have a democratized currency that anybody can use anywhere to transfer money to anywhere, anyone, anywhere?
Well, I think that's right. You've heard, I think, the first reaction from a lot of central bankers and policymakers, Bank of England, the ECB, has been, wait a minute, what's going on here? We're not okay with this. And that's certainly the response we're seeing from Congress as well and the Senate. So I think that makes sense as the default response. And I think the bigger picture that you hear a lot of people talking about with Libra is that in some ways it is accidentally the biggest demonstration of the merits of a protocol like Bitcoin or a permissionless protocol where you don't have a corporation behind the wheel, you don't have a set of executives that you have to trust and believe in, and that policymakers or central bankers don't have to worry that there's some other agenda being pursued. And so I think that's why in June, Bitcoin is up 40% around the time of this news. I think one of the reasons is people said, wow, look at this demonstration of this decentralization thing that we've been talking about in theory, but now you can actually see in practice.
That was my next question. Bitcoin up 237% so far this year. So there's been a big upswing in the last few weeks, but also a lot of volatility.
Yes.
Lily, how is this impacting the industry? How is this impacting the companies you're investing in and your decision to invest in those companies?
Sure. Well, Bitcoin's always been extremely volatile from the beginning. It's, known to have these 80, 90% swings over the span of a couple of years, and that's been the case for several years now, or many years now. That'll probably continue. When the price is up, then it just brings sort of a huge amount of interest and excitement back into the space because people are happy. They're making money, right? There's no surprise about that. And so, I've seen a real uptick in just sentiment, a lot of excitement. Folks coming back into the space, building new products, continuing to innovate. A lot of that, has been happening over what we would call crypto winter, but I would say that's taking on a new pace, and there's just a lot more a lot happier people, a lot more smiles around,
spring.
right?
Facebook hasn't given birth yet.
It's a good time in crypto. As you know, we provide index funds in the space, spend a lot of time with financial advisors, private bankers, institutions, and we've gotten phone calls over the last few weeks from people who haven't returned an email in a year.
So what's the over-under on whether Libra actually comes to fruition? Is it going to happen?
I wouldn't be surprised if we don't see it as it's currently architected in 2020.
What do you think?
I think that something is going to launch. Now, I think it's a question of scope and exactly in which countries it's going to be launching and sort of what the scope of services are going to be around it.
And will regulators come on side? Will lawmakers understand?
I think some will, but then, the very well-established frameworks around KYC, AML, those are absolutely going to have to be in place, right? And so I think a lot of the same rules, regulations, and experiences that we have as consumers when it comes to using a PayPal, a Venmo, right, a Coinbase, or something like that, those are absolutely going to be a part of Libra as well. But I do give Facebook credit for really thinking about the problem of many people not really having access to financial services, and at least the sort of idea of making that accessible and something you use every day is something that will happen.
Okay. All right. Lily Liu, crypto investor, and Hunter Horsley, CEO of Bitwise. Thank you both for stopping by. Coming up, Uber always says it wants to be more than just a ride-sharing service. One way it plans to do that, Uber Eats. We're going to hear from the man running that service in Asia and how it is key to Uber's growth. That's next. This is Bloomberg. The global food delivery business could be in for a major windfall. According to Euromonitor, global spending on food deliveries may rise by double digits to $300 billion by 2022. That could be very good news for Uber as it seeks to solidify its Uber Eats business. Raj Berry, the head of Uber Eats in the Asia-Pacific region, spoke exclusively to Bloomberg's Paul Allen and Cherry An about what this means for their service in Japan, India, and beyond.
Overall delivery landscape in markets like India and Japan is just being pulled forward. We're seeing a huge behavioral change with a lot of new customers coming online. But even with that, it's still very early days in markets like Japan, India, and then across Asia Pacific. I think it's only something like 7% of the addressable markets are actually doing online food delivery on a weekly basis or on a regular basis. So huge opportunity for growth there. And for us, it's actually, we're really focused on even moving beyond food delivery and helping the broader food and beverage ecosystem as they evolve. And so that's a really exciting chapter in our future growth.
Well, of course, in Japan, Uber's had to adapt its business model to fit in with the regulation there. India is famously protectionist, especially when it comes to some of these legacy industries. Do you expect you're going to have to work with regulators there to make the Uber Eats business model work?
Yeah, so I think, what we've seen with our Uber Eats model across Asia Pacific is that, we work very closely with all stakeholders. So we're very invested in working with restaurants and restaurant associations in each of our markets. We work very closely with the safety boards in each of our markets and regulators. And in all of our markets, we're, operating very well, working in a very collaborative relationships with all the regulators, as well as with the restaurant partners. I think, being a quality partner to the thousands of restaurants that we work with is a core part of what we're looking to do. And so, even as we're doing delivery, they're looking at us and saying, hey, how can you help us with marketing? How can you help us think about expansion? How can you help us think about integrating with our tech stacks through more like point of sale integration to make it more seamless? And so I think across all sides, regulators, restaurants, policymakers, it's been a really productive relationship so far.
How about grocery delivery? Will that be part of your Asia strategy going forward?
Yeah, so what we're seeing, which is really fascinating, is that from a customer standpoint, there's a blending of just wanting food that's available seamlessly. And so some of that may be restaurant delivery, some of that may be grocery, some of that may be convenience store and alcohol. And so we're actually do have grocery stores on our platform in Asia Pacific across our markets. We do have convenience stores. We do have alcohol. We're also launching services that are getting great traction, like pickup, where you can, order on Uber Eats and then pick it up at your favorite restaurant. So we're actually seeing an expansion across the spectrum beyond food delivery, and we do expect to further push into that in Asia Pacific.
Raji Berry there, the head of Uber Eats in the Asia Pacific region. Coming up, Cisco switches to buy and it's spending billions to do so. We'll give you a status update on Cisco's corporate makeover next. This is Bloomberg. This is Bloomberg Technology. I'm Emily Chang in San Francisco. Fresh off a bullish sales and profit forecast for the quarter, Cisco isn't standing still. Cisco, whose equipment makes up the backbone of the internet and corporate networks, announced it will buy Acacia in a deal valued at $2.6 billion. Cisco paying $70 a share. That represents a 46% premium to Acacia's closing price Monday. That company makes products for cloud infrastructure operators and communication service providers, and the deal is expected to close in the second half of Cisco's fiscal 2020 year. To tell us more, we've got our Bloomberg Deals reporter, Liana Baker, in New York, and here in the studio, Bloomberg Tech's Ian King, who covers Cisco for us. So, Ian, what's the motivation behind this deal?
Yeah, I mean, if you're Cisco, you don't want to be selling the same box that everybody else has. So what they're doing here is going out and getting some of the fundamental technology, the chips, the basic optical translation technology to put in their boxes, and that'll hopefully differentiate what they're offering, hopefully make the likes of Google, the likes of AWS come back to them and start to say we really need Cisco technology.
So, Liana, talk to us about what this does for Cisco competitively in a market where we are seeing somewhat of an uptick in M&A.
So there's definitely been a lot of tech consolidation in recent years, but Cisco hasn't been the most active acquirer. Even this deal at $2.6 billion doesn't really move the needle for them. Chuck Robbins, Cisco's CEO, has been doing kind of bolt-on acquisitions for Cisco in many different areas. This one is really about its core networking business, but we've also seen Cisco go into software with the App Dynamics deal 2 years ago at over $4 billion. So they're no stranger to deals, but not massive ones.
Chuck Robbins took over from John Chambers, who ran the company for 2 decades, and he had a big challenge to make over the company, if you will. How well is he doing on that count?
Yeah, I mean, he would say it's a work in progress. Investors like it. I mean, the first thing he did was restore growth, which hadn't been the case at Cisco for a long time. There were a lot of critics that said Cisco's finished. Cisco's the company that, yesterday's networks. And what he's done, as Liana just said, is a lot of small deals, a lot of kind of additional things that are brought in services, recurring revenue for Cisco, makes Cisco kind of more sticky, more of a partner than it was. It was just a company that sold these huge, expensive boxes, and now all kinds of things. And he's arguing it's remade the company for the cloud.
Shares are up significantly since the first half of the year. Liana, does this complicate Cisco's supply chain or put Cisco in a position where it's now, to some extent, competing with its own customers?
That was an interesting angle in Ian's story earlier today. A lot of Acacia's customers are competitors to Cisco. Cisco was a customer, but Nokia, Huawei, these are all now, customers of Cisco. So they'll have to decide how much they want Cisco knowing about their supply chain. It's pretty interesting that Cisco has done deals before where the companies they buy, they're a customer of. So we've seen it before, but we'll see how it plays out in these business relationships.
Ian, talk to us about the priority that Cisco is placing on hardware versus software.
Yeah, I mean, it's interesting because they had added a lot of services, a lot of kind of cloud sort of software layers. Now we're seeing a lurch back towards hardware, towards the fundamentals, and I think that this is Chuck saying, look, our boxes still matter, they're still the majority of our revenue. We need to absolutely make sure that these things are distinctive, that they're something different than anybody else can offer and something that people have to have.
Liana, we were talking about the IBM Red Hat deal earlier. In the enterprise world, are we expecting more M&A this year, big M&A?
So as we've reported before, Broadcom and Symantec are on track to announce a deal that could be worth over $22 billion, including debt, that could come the week of July 16th. So that's sort of the one that my sources are looking towards as the next deal. But there could be more in the works that we don't know about. Conversations are definitely going on in the industry.
Ian, what's your take on this Broadcom deal, given Hock Tan, the CEO, his ambitions, failed deals in the past, but his goal to make this company bigger and bigger?
Yeah, I mean, he has a template. His template is, I'll look at a company, it has nice market share, it has sustainable market share, but it's overrun. It's got ambitions beyond its capabilities. I'll cut off those ambitions, I'll cut the costs, and I'll just run it for cash. Symantec arguably fits that mold.
All right. Any deals you're watching out for? I know you can't tell us, but
Liana is the expert. Ask her.
All right, I'll wait for both of you to keep us posted. Bloomberg's Ian King and Liana Baker. Thank you. Coming up, shooting for the stars. Our conversation with Richard Branson and Social Capital CEO Chamath Palihapitiya on their plan to list the Virgin Galactic space business before it ever takes a tourist into space. What it means for the space race next. This is Bloomberg. Houston, we have a listing. Billionaire Richard Branson's Virgin Galactic will become the world's first ever space tourism venture to hit the public markets. This after receiving an $800 million investment from the publicly traded firm Social Capital. Branson and Social Capital founder Chamath Palihapitiya joined Bloomberg earlier today.
When we sadly couldn't go ahead with the Saudis, I decided that I would fund Virgin Galactic to profitability myself through the Virgin Group. And then we got a call from Chamath, who said that he was keen to have a look. And He went to see our space people, spent some months looking into it. And why don't you carry on from there?
Well, I mean, I'd been an admirer of the business from afar, and then we had a bunch of mutual friends who were early customers. So I was always wondering what's really under the hood, and when I got to see the business, I was pretty floored, quite honestly, about what they built and the quality of the business that it would become. And so it took us 9 months, but we got here.
And you were going to be chairman of the board with a $100 million personal investment as well. So Richard, did you talk with other funds? Did you look for other backers in Asia, for example, or in the Middle East?
No, yeah, as I said, I mean, we did have the deal from the Saudis. That was not possible, and you know, if we were to actually take this public ourselves, it would take a long time. So I think the Chamath's approach seemed to work very well for us.
Chamath, was this the last roll of the dice for you? My understanding is that the fund would have had to return investment money in September. Richard talked about the fact that this has been 9 months in the gestation. You were cutting it a bit fine, weren't you?
I don't think so. You know, we'd met more than 200 companies over many countries over the last 2 years. It did take us 9 months to do the diligence required to really get under the hood and understand what they built and to feel comfortable across all aspects of the business. Could we have done another one? Sure. Could we have invested in something else? Yeah. But I think that we found the absolute best company, something that'll thrive in the public markets, and frankly, something that's going to capture an enormous amount of consumer interest, giving the average person a chance to own a bit of space. And I think there's, frankly, nothing more exciting than that.
Richard, the average person's going to own a bit of space. When is the first flight going to be? Let's try and nail that down.
Now that we're a public company, I'm going to have to be very circumspect in what I say. So what's happening at the moment is we're moving the whole operation to New Mexico, and that's where the spaceport is. We're moving our rockets there. We're moving our spaceships there. We're moving our motherships there. Then we'll do a few final test flights from New Mexico in the new situation, and then I'll go up, and then the public will go up. I'm not going to give a specific date because I'm told I'm not allowed to, but we've had 2 very successful flights into space recently. We've made 5 astronauts, the first 5 astronauts to be made in America since 2009. So we're after 14 years of hard work getting this far, we feel we're on the verge of something very special.
Now, it's very exciting because you specialize in suborbital flight, slightly different from Jeff Bezos' outfit and also Elon Musk's outfit. They're looking at slightly other segments of space, if you like. 56 miles above the Earth and 3 times the speed of sound, which you have now hit. You did say that you'll go up in 2019. Will you?
If our brave test pilots are ready to say to me they've now tested the craft through and through, I will go up when they tell me to go up. But whether it's by the end of this year or slips into next year, we'll see.
How many customers have paid, what, $250,000? What's it up to now?
So we closed out booking people 5 years ago because we had 600 customers. We got $80 million on deposits. Since the test flight, we've had 2,500 more people saying they want to come in. And you know, our research indicates that there's a very large number of people.
You know, this is an incredibly capacity-constrained market. Just servicing the customers we have will take 2.5 years. Once you convert some of these 2,500 people, the first 3 or 4 years of operation is already mostly spoken for.
Richard Branson, Virgin Group founder there, and Social Capital co-founder and CEO Chamath Palihapitiya. For more context, I want to bring in Bloomberg Businessweek's Max Chafkin, who's here with us in San Francisco for a little while. So, Max, first of all, it's a little complicated how they actually pulled this off because a publicly traded company associated with Social Capital, but Virgin Galactic, essentially.
Yes, that's exactly what happened. As we heard in the clip, Social Capital raised money from investors to basically acquire a private company, and in doing so, take it public. And the pitch that we heard from Chamath Palihapitiya was that basically this would be a much more efficient way to go public. He was saying when he started talking about this a couple years ago, it was that the IPO process is broken. It takes too long. There's too much regulatory oversight. So this would be a thing he could offer private companies. And I think it kind of makes sense for Virgin Galactic, because Virgin Galactic, you're talking about, extremely high potential. I mean, this could revolutionize air travel. It could be the new Disney World. It could, we could all own a piece of space. On the other hand, it's super speculative, and it's the kind of thing that I think is potentially hard to value, and you can see why, it might make sense to go public in this.
Right. On the other hand, it could never happen or could not happen for 100 years. Yep. So how big a milestone is this that a space company that's never taken a person into space is going to very soon be officially a publicly traded company?
I mean, when Branson and his partners started talking about this about 15 years ago, and they had this first test flight, I think it was in 2004, the idea that private space was going to be like a big industry was kind of a joke. I mean, there were a few people, Elon Musk, I think, was just at the beginning of SpaceX. This was going on, but it was very niche. So having this happen, having a privately held space company go public, I mean, it's a big deal. We should also say that Virgin Galactic has had test pilots in space, so it's not like they've had no humans there, which is different from the Jeff Bezos and Elon Musk companies. Now it should be said, though, that the kind of space travel that we're talking about is not like going to the moon. It's like going to space for a few minutes. You're going just to the edge of space, experiencing weightlessness, and then coming down. So it's sort of in between, a trip on the Soyuz, which is currently the main option for private space travel, and the idea where you take a 747 and they sort of dive bomb for 60
or
or 90
the Tower
seconds.
of Terror at Disneyland.
Right, exactly.
Something like that. Now, how does this give Virgin Galactic an advantage over SpaceX, over Blue Origin? Does this give them more flexibility, more visibility at all?
I mean, I don't think especially. I mean, I think SpaceX is a huge valuation, much, much higher. I mean, it's a private valuation, so that's different, but I think it's somewhere around $30 billion. They've got, billions and billions of dollars in government contracts. That company is well positioned. Blue Origin obviously has the pocketbook of one of the world's richest people, or the world's richest man. And so those companies have nothing to worry about. That said, Branson obviously is a wonderful marketer, and I think, being public and having that additional outlet for his sort of doing his thing will probably help the company.
And you look, Branson, Bezos, Musk, they've all said they're going to personally go into space as well. Branson has said he's going into space this year, and just there he sort of waffled a little bit. It might slip into next year, but I don't know. Is that going to be the test?
I mean, Branson probably has more credibility than either of those guys in that he's done all kinds of weird stunts in his career. So you kind of tend to believe that at some point he will be the test pilot. Although I think one thing that we've learned tracking these private space companies is that the timelines always slip. I mean, Virgin Galactic has been talking about sending tourists into space, as of 2009, 10 years ago. So it's definitely a moving target, and so I wouldn't hold your breath.
Meantime, it's also an interesting development in the land of Silicon Valley venture capital, with Chamath Palihapitiya's firm now being associated with Virgin Galactic. Chamath has always been a bit of an iconoclast, and more so of late. Is this a trend?
I mean, he has sort of been pivoting. I mean, it's hard to remember, but Social Capital was supposed to be kind of the standard bearer, the next, Kleiner Perkins or the next Sequoia, and pretty dramatically the company has sort of pivoted away from that traditional image of venture capital. They talking about doing automated deals and doing this kind of special purpose acquisition companies.
A number of partners have left the firm.
Yeah, and absolutely, there's been internal problems. So I think for Social Capital and for Chamath, it's got to feel like this is a positive development. They've found a partner. This thing is going to happen, and yeah, Virgin Galactic is definitely a risky bet, but they have impressive technology, and as I said, they've sent test pilots into outer space before.
Well, it's certainly fun to talk about. Will be fascinating to watch, and we'll be seeing if Branson makes good on his promise there for 2019 or maybe 2020. Bloomberg Businessweek's Max Chafkin, good to have you here in town. Thank you. Still ahead, Facebook is attempting to drastically increase minority representation in its workforce. How the social media company is tackling its big diversity problem. Next, this is Bloomberg. A federal appeals court said Tuesday that President Trump cannot block his critics on Twitter. The decision upholds an earlier ruling that Trump violated the First Amendment when he blocked users who were critical of his policies. In a 29-page ruling, the three judges wrote, "The First Amendment does not permit a public official who utilizes a social media account for all manner of official purposes to exclude persons from an otherwise open online dialogue because they expressed views with which the official disagrees." Interesting. Well, Facebook has unveiled ambitious goals to improve workforce diversity. In its annual diversity report, the social media company announced plans to double the number of female employees globally over the next 5 years, as well as the number of Black and Hispanic employees in the United States. Facebook also said it wants half of its U.S. workforce to be from underrepresented groups by 2024. Joining us to discuss, Bloomberg's Kurt Wagner. Kurt, it's no secret that Facebook, as many big companies do, struggles with a diversity problem. They release a diversity report every year, but this is new, setting fairly ambitious goals like this one. Tell us more about it.
Yeah, this is the first year that they have ever kind of like planted a flag of sorts and said, here's where we want to be 5 years down the road. And when you look, at least with the goal around women, I believe currently it's about 33% of their company is women, and so
36.9%.
Oh, thank you, 36.9. I should know that by now.
36.3%.
Yeah, but that's about 14,000 people, and so when you think about doubling that over 5 years, I mean that's not an insignificant goal, right? And so they have routinely made between 0.5% to a percentage increase in a lot of these categories year over year. So to do that in 5 years is going to be really interesting.
Now, I would like to add that the number of women in technical roles is 23%, and people often argue that those are the roles that are the most important at Facebook because they're prime decision-making roles that have a huge impact on the product, and that's harder to change.
It is, and Black and Hispanic employees are only 5% of those technical roles. And so, when I spoke with the company, they were saying there's a bit of a sad irony about this, which is that that's actually where they claim they've spent the most time trying to diversify their workforces in the technical, space. They've had the most trouble doing that, and there's not really one answer to why that might be, but there is some frustration from them that they haven't been able to kind of diversify that specific group of employees.
We actually spoke to Mark Lucky, a former Facebook employee last year, who came out last year saying Facebook has a, quote, Black people problem, and it's not a problem that just affects the people who work there, but also the people who use Facebook, Black users who use Facebook. Take a listen to what he told us last year.
They really don't think of the Black experience, which is a shame because Black users are overperforming on the platform. And so it's a missed opportunity, it's a missed financial opportunity for Facebook to not engage with those users in a meaningful way.
So that's why this is important, not just because it's the right thing to do, quote, but because it matters for the business. Because who's making the product matters.
And it matters. And one of the examples they gave at F8 this year was Portal, their new video chat device. Basically, they had an employee of color who was working on it, and she found out that she wasn't being picked up by the camera as well as some of her white colleagues. And it was a thing that if only white people had been working on the camera, they may have never realized that, in fact, it doesn't work as well for people with darker skin tones. And so that is the example that Facebook likes to use of saying this actually impacts our products and it makes them better for people who use them.
So how does Facebook intend to do this so quickly?
Well, it's not going to happen super quickly. I mean, I guess they have 5 years, but as we've seen over the last 6 years that they've been unveiling this data, it is a very slow moving process. One thing they've said that works really well is in their interview process when they have a new position, there is a rule that they have to bring in a underrepresented group to interview for that position. It's kind of their version of the Rooney Rule, which was made famous by the NFL, requiring minority candidates to be brought in for head coaching positions and front office positions. Facebook says that works. They've said, hey, by kind of bringing more people through the door to actually interview for these jobs, shocker, hey, we're now diversifying, we're hiring more of those people. And so, the things like that they want to do more of. It's just a matter of, if they knew the answer, obviously we wouldn't be talking about this right now.
Now, Facebook with the leadership of Sheryl Sandberg, has certainly tried to lead on these issues, and she's, been a leading voice in the world on these issues. But I feel like I have to point out that this is good timing.
Yeah.
Or is this good timing for an announcement like this that makes Facebook look good when Facebook isn't looking so good?
Yeah, I mean, normally when I come on and we talk, it's like, what disaster did Facebook have this week? And here, it seems like they're trying to do the right thing, and they're trying to, build a workforce that reflects the people who use their product. And so I don't think it hurts that, it's a viewed as kind of a positive announcement. I don't know. They do this every year. They don't do a goal every year, but they announce these numbers every year. And so it's not like the first year they've ever done it, but, it doesn't hurt that we're, giving them a bit of a compliment today.
Well, we'll hold them to it.
Yeah, absolutely. Check back in 2024.
All right, Kurt Wagner, who covers Facebook for us. Thank you. And that does it for this edition of Bloomberg Technology. Reminder, we're always streaming on Twitter. You can find us there at Technology. You can follow our global breaking news network, TikTok, on Twitter. This is Bloomberg.